Hey, it's Ty Crandall with Credit Suite, and in this short video, I want to introduce you to the third type of credit you have as an entrepreneur. Shh, this one's secret. Most entrepreneurs know nothing about this. And by the end of this training, you're going to know what this third type of credit is, how it's used to qualify you for all types of bank credit cards, loans, and credit lines, and what you can do to control it to have the best chance of getting approved for the most money at the best terms for your business. So there's three types of credit you have as an entrepreneur. You have consumer credit, obviously familiar with that. You have commercial or business credit, which I talk about as well. And there's also a third type of credit called bank credit. So this credit score is known as the bank rating, and it's not something you're going to find very much information about online. As a matter of fact, if you look for bank rating, you're probably only going to find my training that teaches you how this internal credit scoring system works. But banks use it, conventional banks, Bank of America, Wells Fargo. Anytime you apply for a credit card, a credit line, or a loan for your business, they are looking at your bank rating. And your bank rating needs to be high enough to meet their criteria, or you simply won't get approved. And here's the worst part. If you get denied because your bank rating isn't high enough, they're never going to tell you this. This is something you'll never know because they don't need to disclose that information in the commercial world. Only in the consumer world per the Fair Credit Reporting Act, why you got denied and which bureaus looked at. But in the commercial world, you get denied for this all the time and probably don't even know it's happening. So your bank rating is basically a 4 and a 5 ranking system. In order to get approved for any kind of bank financing, you need to have what's called a low 5 bank rating. Now, primarily this rating is driven by how much money you have in your business bank account on average over the last 90-day time period. So in order to have the low 5 bank rating, the minimum that you need to get bank loans and bank financing, you need to have at least $10,000 in your business bank account on average over 90 days before you apply. The highest bank rating you can get, a high 5, happens if you keep an average of $70,000 plus in your bank account over a 90-day time period. So this means if you're ever going to go apply for a bank credit card or an SBA loan with the bank, you need to really make sure you're maintaining those balances to have the best bank rating you can have and have the best chance of getting approved for credit financing. Of course, there's other factors they look at as well. But if you don't meet this one criteria, you simply will not get approved. Now, your bank rating takes other things into account as well. How you manage your bank account. Do you have a bunch of non-sufficient funds? Do you have positive ending balance at the end of every month? Do you have more money going in your bank account than going out? Do you have consistent deposits? All of those things will be calculated into your bank rating and the overall, basically, how lendable that you are. Okay, on top of that, they're also looking at how many bank products you have. So if you have a bank checking account and a savings account and a money market account, that helps weigh more in to you having a higher bank rating as well. So how long you've had your bank account open for is another factor that they look at. So basically, how you manage that bank account, how much money you keep in there on average, the fact that you manage it responsibly, the fact that you have multiple different types of accounts, that you've had some longevity in your bank account, all of these things are calculated into that bank rating. And it's one more further important point to know is that you also have another secret credit report from the banking system called Check Systems. And with Check Systems, CHEX Systems, then you can actually have your own report and your own score with how you manage your bank account. You have it in the consumer world, you have it in the commercial world. As a matter of fact, if you go to creditsuite.com/Check Systems, CHEX Systems, SYSTEMS, you'll actually find all the links you need to go in and to be able to see what's on your Check Systems credit report for free and get your Check Systems score. So there's 2 different ways that your bank account is looked at, your bank rating and Check Systems report and score, that lenders and credit issuers are using to determine if you should be approved for financing and the rates and terms that you'll pay. So make sure you manage your bank account responsibly. Make sure you have at least $10,000 in that bank account on average over 90 days before you even think about applying for a loan, credit line, or even a credit card from your bank to give you the best chance of getting approved. To learn more about getting money for your business, make sure you visit us online at creditsuite.com/EIN. That's creditsuite.com/EIN, where we tell you even more information about building your fundability that helps you get the most money at the best terms, and building your business credit, which also helps you get all the money you want to at the best terms for your business. That's creditsuite.com/EIN to be on your way to getting the most money for your company when you need it at the best terms.